All right, welcome back to Not Financial Advice. I'm Sean. On today's video, we're going to be completing our two-part series on the top cannabis stocks for 2024 and beyond right after this.
You need to diversify your bonds.
The only problem you're going to have is that you didn't buy more. Because by the time you read about it in the Wall Street Journal, it's already too late.
All right, guys, it's Saturday afternoon here, early January 2024. U.S. stock markets are closed, of course. So what we're going to do to kick off this video um, to show the top three cannabis stocks, in my opinion, for 2024 and beyond, is I'm going to bring you inside of my portfolio like we start off most of these videos, but I'm going to show you my position sizing and performance in the stocks that we're about to talk about. I'm going to ask you to like the video and subscribe to the channel. And also remember that, like always, if there's a stock or an ETF that you'd like for me to review, you can go ahead and drop that ticker symbol in the comments below. But let's get right into it. So the first stock we're going to be talking about, or maybe in no particular order, but we're going to do a little bit of a spoiler alert. You're going to see the three companies I'm talking about, but we're going to show my sort of position sizing in them. So the first one that we have is Turning Point Brands. If you've never heard of it, that's all right, because we're going to explain that. But I'm down 12%. I have $700 of stock. So we're also going to be discussing Green Thumb Industries. I happen to be up on that 5%. I have $690 of stock. And then one of my biggest decliners, one of my biggest losers of all time is Trulieve, down a whopping $1,500 or 71%. Great Depression type vibes. I have about $610 of stock. And so we're going to be breaking that all down right now. So first things first, let's sort of get a frame of reference of where we're at. So it's 2024. Mid 2021, there was a surge in the price of cannabis stocks and a lot of buzz around it. People were thinking that the Democrats would legalize marijuana, which was foolish in retrospect. But things are moving in a different way. And so, as of 4 months ago, the Biden administration directed the Department of Health and Human Services to do a review on cannabis. And 4 months ago, they made the recommendation that it should be changed from a Schedule 1 to a Schedule 3 drug. Now, here in the last week or so, the DEA has confirmed that they are, in fact, reviewing the FDA's recommendation. In the meantime, we've also had 12 Democrats, state attorneys general, submit a letter to DEA urging them to reclassify, likely to reduce the harm caused by fentanyl. And here over this weekend, leading into the next trading week, we have an article from Marijuana Moment. Feds release marijuana documents, confirm Schedule 3 recommendation based on accepted medical use. And so that is what the Department of Health and Human Services put into their recommendation to the DEA, that there is, in fact, accepted medical use and that there's a lower likelihood of abuse than drugs in Schedule 1 or 2. So that's framing everything. And what I'm going to do now is sort of lay out my bull and bear case for investing in the U.S. cannabis sector. So in the bull case, we have several concepts. As I'm jumping into this, you can read this as I'm talking, but I'll ask you to like the video and subscribe to the channel if you're digging this video so far. But the bull case for pot stock investing is that marijuana in the future could become a consumer defensive like product, not unlike beer or cigarettes. Okay, which could give it durable earnings in recessions. But on the other hand, it's an interesting product because, unlike tobacco or alcohol, there's medicinal uses for marijuana. So we can also see that element of a medical slash biotech like property to this sector of the U.S. stock market. And you can see a lot of growth in those sectors. So I see an attractive combination of defensive and growth elements behind marijuana companies. And so that's why I'm invested in them. Okay. It's a long term investment, 5, 10, 15, 25 years. So, what I also see as a possibility is higher margins in marijuana than other consumer packaged good companies. And we'll get into that a little bit when we look at some of the products that some of these companies are putting out. But lastly, a bull case for marijuana investing is deregulation, um, access traditional banking, uplisting to American stock exchanges, which would bring in institutional money, not unlike what's happening with Bitcoin ETFs. And also, if and when, or rather when, in my opinion, we have marijuana be rescheduled. It gets rid of an IRS Rule 280E, which is going to take marijuana companies' effective tax rate from 75% to 25%, like every other publicly traded company. That increasing free cash flow, earnings per share, allowing these companies rather to write off expenses and to do more research and development, capex, things like that, and grow their companies profitably. Now, with that being said, there are um, several bear case scenarios for cannabis stocks, and looking at it, um, an argument can be made that marijuana is like a commodity, and so that will just drive margins down, and no company will have pricing power. That marijuana would be no different than soybeans or pork belly futures. I don't believe that, but that's an argument that could be made. We do have a large illicit market. And so the question might be, why would someone go to a store and buy regulated marijuana when they could just go to their friendly local neighborhood drug dealer um, down the street? But, it's kind of a little bit like this.
Okay. Be careful with that thing, man. Here's the cash. Grab the stash. Alrighty, man. Thanks. Have a good one. Don't hurt yourself. Adios.
Hey, wait a minute, man. Let's smoke this fucking thing.
I can't, man. I
can't even light this thing on my own. Yeah, I need your help, man.
I'm in.
Business. Got my persona. Yeah. What's up, Chris?
Yo, hey, Sam.
Hey.
How you doing, buddy?
All right, Holmes. Good. Who's this?
Hey, that's my friend Mark.
Got the dough? There you go.
Appreciate it.
Nice. Good to meet you, Mark.
So,
Yeah.
give me Percocet, please.
Percocet? What are you talking about, man? I don't sell that shit.
Chris.
Nice. Yeah, nice. Peace out, Holmes.
Thank you.
God. Yeah. Fucking lingerer, man.
Yeah, totally.
Linger.
Not to mention, there's a threat anymore of drugs being laced with fentanyl. So I don't really buy into that bear case argument. But then there's also the threat of big tobacco and alcohol. Different tobacco and alcohol companies, be it Sam Adams, Coors, be it Altria, they all have some exposure to cannabis and they want to get in. But what we've seen is that the companies that have established a medical foothold are these small cap companies. And they're the companies that are going from medical to adult use when states are making those changes. And so I think that that could happen over time, but owning these companies that could be acquired in 10 or 15 years could prove to be highly profitable. And then there's the other threat, which is that no improvement happens in the regulatory area, which would mean that seeing the ability of these companies to get to scale and produce profit in austere conditions could take even longer or maybe never happen and could lead to significant capital loss. So those are the different theses for the investments, and we're going to get started over here, continue rather to sort of frame what we're looking at. And so this is a chart of MSOS, which is an ETF actively managed by Advisor Shares that looks at cannabis stocks. And so I sort of use this as a benchmark like others would use S&P 500. What you can see is that pot stocks are up 17% in the last 365 days, but they're up 70.1% from their low. And that inflection point that you see back there on August 28th is when the announcement was made that Health and Human Services was recommending rescheduling. Now, with that in mind, this chart looks pretty bullish. You can see higher highs. But sometimes in life, you got to zoom out. So up 70%, all that bullishness. But this is where I've been living. This is where I've been living. Somewhere like that, trying to buy the dip, fighting emotion. And, this is a crazy looking chart. Different trajectory, that's for sure. We'll see how long that lasts. Like the video, subscribe to the channel. I got a lot more for you guys. So we're going to get over here and take a look at my third of three top cannabis companies for 2024, which is actually Turning Point Brands. So it's up 15% in the last year. Overall time, it's done reasonably well. Done really poorly in the last 5 years, which could show that it has an attractive valuation. But yeah, Turning Point Brands looks fairly bullish on the year chart. This is a small cap value company, consumer defensive, primarily a tobacco company, actually. Um, but what I'm going to do is show you all something Turning Point Brands offers. Let's get right into this. So this is, as you can see right here, this is the company that owns Zigzag. And so people say when others are mining for gold, sell picks and shovels. And so when we get to a place where marijuana is Schedule 3 in the US, or if that doesn't happen and you have 39 states with legalization and 50 states with medical marijuana in 10 years from now, that'll increase the amount of rolling papers that are sold. It's not that much of a stretch of the imagination, the thesis on that. But, this is what you saw in a Cheech and Chong movie, but now they're doing hemp cones, right? And so they also own some chewing tobacco as well as some vape products. But interestingly, not sure if it's going to show this on here. They also took rights to sell clipper lighters in the United States. Clipper lighters is either the second or third largest lighter manufacturer in the world. And so Turning Point Brands has exclusive right to distribute clipper lighters in North America. And so the reason that that's important is clipper lighters basically have sort of a fan following with cannabis enthusiasts, and so there's a couple reasons for that. What we can see here is a few fold. So this is a refillable lighter. This is also a lighter, I believe. Not sure where it is on this item, but there's usually a poker that's in an integral, like poker, like that part of a pen that's part of the clipper lighter that people use to tamp down cannabis when rolling or when filling, say, a Turning Point Zigzag cone. And so this is sort of something that people on Wall Street don't know about. Um, I learned about it through research on the internet, but clipper lighters are an accessory, a pick and a shovel, if you were, for people who are buying Zigzag hemp cones and a clipper lighter to light up cannabis in um, Colorado or even Missouri. So all and many and most states are starting to move in the right direction with cannabis. So that gets us into Turning Point Brands. We're going to be doing a DCF on this, guys. So let's just get an overview into Turning Point Brands, my marijuana pick and shovel play. So what we can see here is this is a small cap company, a value company, forward PE of 19. We can also see a really healthy free cash flow yield of almost 10%. And we can see that they have a dividend yield, which is safe. So all these things are great. Let's get through it. We're going to do our checks and minuses. So revenue growth is up and to the right. It looks like about 5-6% growth annually, normalized moving forward, up and to the right, revenue growth, check mark. Now, looking at free cash flow on Turning Point Brands, they are being pretty respectable with stock-based compensation, so they're not diluting shareholders an awful amount. But free cash flow is choppy, but also up and to the right. This is going to be a check mark for Turning Point Brands on free cash flow. Moving forward, looking at other metrics that matter, let's take a look at earnings per share. up and to the right, a little bit of choppiness, but showing a lot more consistency from this year to this year. Up and to the right, for the most part, I'm going to give this a modest check mark. So looking at cash and debt, not super thrilled about this. I'm going to give this sort of a neutral or a pass rating on cash and debt. Looking at dividends, they're up and to the right. Great dividend growth on this company. It's a safe payout ratio, enthusiastic check mark. Dividends for Turning Point Brands. Let's take a look at shares outstanding. They're slightly issuing, but not by a lot. They issued and then they bought back. This is going to be a neutral rating on Turning Point Brands for shares outstanding, not diluting us too bad. Let's take a look at ratios on Turning Point Brands. So it looks like a median in recent times is somewhere around this number, which is 14%. That's quite decent. So I'm going to give returns on capital employed for Turning Point Brands, the maker of Zigzag rolling papers. I'm going to give this a check mark. Let's also check in on profit margins. Profit margins, let's go back to 2012. Tiny profit margin. That's crazy. 4.46 down to 2.8. I guess this will be an X. This doesn't look overly fantastic. This is their bottom line profit margin. Actually quite bad. Big red X check mark, sadly. But everything else is looking pretty good. Let's take a look at valuation, PE valuation, before I speak too soon. This is trading at a pretty high relative current price to earnings valuation. So this will actually be, if the data here is correct, this is going to be an X. And we also can see that expenses are going up, also going to be an X. Now, keep it pushing. Like the video, subscribe to the channel. What we can see here is the shares on Turning Point Brands are trading for $25. I have insiders buying. I have insiders buying above that price. The only reason that insiders buy stock in a company is because they think the price is going to go up. So $35 stock. Excuse me, $25 stock. I have insiders buying at 38. I have insiders buying at 30, as well as insiders buying around 37 and a half. Multiple insiders buying. Insiders buying at 29. We do have sales throughout. I have insiders buying at 21. And so we have a lot of insider buying going on in the stock. Enthusiastic, double plus good check mark on Turning Point Brands. So with that in mind, I have prepared a DCF. So we're doing this live. We're doing this in one take. So that's the average of free cash flow on Turning Point Brands over the last 5 years. Just entering in this data so you can get a little bit of a behind the scenes of how this works. That's cash on hand, and then now we have debt, so we're entering that as well. So this is how I arrive at my fair value estimates on companies. Shares outstanding was 18.06 million on Turning Point Brands. Growth that I've put in, reasonable projections in my opinion. $25 stock, 10% required rate of return. Value on Turning Point Brands, only $12. Not great. I might be looking at this the wrong way. So let's be a little bit more flexible. Let's do a required rate of return of 7.5%. $25 stock value, $29. And so this stock is probably trading somewhere near fair value, but it has run up about 15% in the last year. I own it. I'm actually down on it. So I'm going to continue to hold and buy on this one. So let's reset this handy dandy machine, because we're going to be reviewing our number 2 stock, number 2 best pot stock to buy for 2024 and beyond. So now we are looking at Green Thumb Industries. Incredibly, remarkably up 58% in the last year. They've just started out in a better position. They've run 81%, which is more than MSOS ran, the actively managed cannabis ETF. And so all that looks great until you can get the perspective that others have had. This chart looks more bullish than most. Running for a year and a half, up 50%. Yeah, looks pretty great. But they got in before all the craziness valuation in 2021, so they started at a lower valuation, which helped their long-term performance from their IPO. But this is where I started getting involved and then buying down, averaging down. Relative outperformance for GTI, really good actually stock performance for this type of economy. So, we talked earlier about a bear case for cannabis investing, that, marijuana is a commodity. So how will these companies have pricing power? Well, look at this. So Green Thumb Industries, incredible edibles. Frankly, they look like Willy Wonka chocolate bars, but they have child-proof packaging, warning labels, all that good stuff. But this marketing is absolutely fantastic, and I know has to lead to pricing power. And so we'll actually look at their bottom line margins to see if that's just my perception or if it's reality. But there's the Windy City Incredible Bar for their cannabis customers in Illinois. But additionally, more incredible bars, Red Velvet, famous banana pudding. I've heard that these taste very good. Mile High Mint for their customers in Colorado. Snoozeberry. This is probably helping people get off Ambien. This is investing a 1 to 5 with a high amount of CBD in it, or CBN, which is probably like CBD. This is a company doing real good in the world, helping people. So proud to own it. Now we're going to get into a video here.
Hey everyone, so we're working through the
We're going to get into a video here from another YouTube financial guy named Andrew Brown. He's done some absolutely tremendous work, sort of highlighting the footprint of different cannabis companies in the United States. So I'll be leaving a link to his channel below. Make sure to go give him the support and the likes and the subscribes he deserves. But let's share this content together. So we're going to be looking at how many stores Green Thumb Industries
the
has.
retail footprint that they currently have. And if we look at the makeup of their stores, they have 80 stores across 14 states. Nevada being one of the bigger ones, Illinois, Minnesota is actually really interesting because with Green Thumb and Goodness Growth, they're the only two who are able to get licenses in Minnesota, and they're only going to issue apparently 2 licenses. Obviously, rules might change, but Green Thumb and Goodness Growth have essentially a duopoly in the Minnesota market, which is pretty cool. They have a few stores in Florida, but Pennsylvania, they have quite 17 stores, which is quite a lot. And scattered amongst the others, they've got a few stores. And another cool thing about them having one of the 2 licenses in Minnesota, their stores, they have 80 space. Another thing I liked is that they've had no need to close any stores so far, as they were quite thoughtful and disciplined about the retail footprint that they currently have. And if we look at the
all right, so coming back in here, what we can hear and learn and see about Green Thumb Industries, thanks to Mr. Brown, is that they, have stores, 1 in California, 8 in Nevada, but they have 10 in Illinois. That, I believe, is their home base. They also have 5 in Ohio. Now, this is a little bit confusing. I thought that he just said that they had 7 stores in Minnesota, or 2 stores in Minnesota, but this shows 7. So that might be a little bit of an error, unless I'm confused. But anyway, they have a presence in the South and Florida, but also Maryland, Virginia, and then interestingly, 17 in Pennsylvania. The rest of these in these smaller New England states, so on and so forth. So this is going to be Green Thumb Industries is kind of Midwest and Northeast and Mid-Atlantic seaboard. So I'm getting diversification geographically within the US. And so that's what I wanted to bring your attention to. Now let's keep pushing. We're going to look at GTI over here on Qualtrum, and let's run through our things. So GTI is trading for $12.55. Let's take a look at revenue growth. Massively up and to the right. Massive check mark. Okay. growing at 74%, 75% year on year over the last 5 years. I'm going to normalize that out in our free cash flow estimate, but that's just monster revenue growth. So let's take a look at free cash flow for Green Thumb Industries. Great thing about Qualtrim, link for the description below. Again, I don't have any affiliation with Qualtrim, so that's why I'm going to leave that link. But I don't like the naughty things these people are doing with stock-based adjusted free cash flow. They're kind of raiding the coffers here a little bit. We need to see this on a quarterly basis. When it comes to stock-based adjusted free cash flow for Green Thumb Industries, I'm going to give this a I'm actually going to give it a red X. So they're kind of making me mad how they're paying themselves stock-based compensation. Yeah, that's pretty inappropriate. So with all that being said, they are getting a red X on free cash flow, which is tragic because that's my favorite thing, free cash flow. But we can see here that even under 280E, there's been a quarter where they've been able to produce 16 million in free cash flow. I'll be sort of making some projections based on an improvement of regulatory conditions based on that. But yeah, not great to see. So let's keep looking. We're going to go back to annual. Let's look at some other metrics here on the company. Um, earnings per share, red X. The cash and debt position looks quite good. That's going to be a green check mark. Looking at shares outstanding, they're diluting a lot less than other companies and they don't have access to traditional financing. So I'm going to give that a neutral or a pass. Looking at returns on invested capital, not sure really how to look at this. It's not great, but I'm not sure if this company with these challenges should be judged on that. So I'm going to give that a pass. Expenses are up and to the right, so that's going to be a red X. And then it looks like relative valuation is higher. Let's just take a quick peek. I don't know if this is going to be reliable enough because they've posted inconsistent low earnings per share. So I'll give that a pass. So let's see what we can see here. Insiders are, I don't see any insiders buying. Okay, so that's Green Thumb Industries, $12.55. We're going to do our DCF on it and do a projection of the fair value. So I'm doing a projection here based on sort of some of their best quarters, and this would be if marijuana gets rescheduled. I think this would be very conservative, very very conservative as far as what they'd be able to put up. But I'm going to do two different assumptions with this model. So inputting all the data that I got from over here on Qualtrim. You can follow along as I'm doing it. I don't need to explain it to you because it's pretty straightforward. If you like these longer format videos and you're still here, make sure that you liked it and have subscribed to my channel. So growth rates. Okay, I'm going to do 37.5, 17.5. Terminal growth rate 3%, discount rate 10%. $12.55 stock value, $6.31. So you need to stop monkeying around on the stock-based compensation. I think the CEO is a young, smart guy, and I actually admire him. I think that in the long run, he should behave better, but it sort of took me off guard how much they're raiding the coffers here. With that being said, I think that if they've done 16 million in free cash flow in one quarter, with or without rule changes, in 2, 3, 4, 5 years, I think it's conservative to say that GTI could put up $40 million on a yearly basis with free cash flow as a projection. And so if we make that assumption, a $12.55 stock would be worth about $15. So seeing upside there. I think it's totally something that could be seen in the future. So moving right along, I'll ask you to like the video and subscribe to the channel. Let's keep it pushing. So now what we're going to do is take a look at our last of three companies, which is in fact Trulieve, number one, my top marijuana investment, and I'll make the case, the argument as to why. So over the last year, we can see a pretty similar looking chart to others. A little bit of outperformance over the index MSOS, up 77% since that announcement 4 months ago. And let's see what else we can learn about Trulieve. So this is a company that is run by this lady. Her name is Kim Rivers. She's the CEO. Okay, that's who she is. This is her husband. Different name. Can't remember what it was. He went to prison. There they are together. So part of the thesis, a little bit of a house of cards situation. Let's learn some more. Husband of Trulieve cannabis CEO sentenced to 3 years, fined $1.25 million. JT Burnett. What a great Southern name. Florida businessman, husband of Trulieve CEO Kim Rivers, sentenced 3 years federal prison for bribery charges. According to Tallahassee Democrat, Burnett apologized Tuesday for sentencing damages caused by his actions, but didn't apologize for the crimes he was convicted of because he was going to do an appeal. Blah, blah, blah. In August, Burnett was found guilty of participating in a multi-year scheme to extort bribery payments of 10 G's a month to a then city council commissioner in an effort to secure real estate development projects in Florida. What else? What else do we know? Neither Rivers nor Trulieve were accused of any wrongdoing in the Burnett case. But the case renewed questions about the company's dealings with a construction firm owned partially by Burnett. So Trulieve had some dealings with a construction firm owned partially by Burnett. So we're starting to see a little bit of a picture painted here. More. In sentencing, prosecutors claim Burnett Bashir's manipulated Florida medical marijuana law. So what else can we see? Federal prosecutors argued that Tallahassee developer Burnett deserved a stiffer sentence in part because he admitted to conspiring with childhood friend and former state rep to keep out competitors in the nascent medical marijuana industry in Florida. Whew. So let's go back here. I'm just going to be real with you. Seems like these people are fairly ruthless. A power couple, house of cards. I think there's definitely a good old boys and girls network in the South, particularly in Florida. I'm not naive to the ways of the world, so it is what it is. So, her husband got pinched. She didn't get caught up, and they're keeping it pushing. So, some people, anyway, I don't care. I'm here to make money. Let's talk about this. Okay. Let's talk about the footprint that Trulieve has. We're going to come back to our
Hey everyone, welcome
new
back.
friend.
Today we're looking at Trulieve.
We're going to be coming back to our new friend, Mr. Brown, and we're going to be taking a look at Trulieve's positioning as far as stores owned across the United States as an MSO and where they are located.
Dynamics have crushed. Trulieve have had to pull some of their operations from unprofitable locations. So oversupply dynamics have crushed many retail stores in certain states. California is the big example here. I don't think this was ever a big problem for Trulieve, as it only had a small number of stores in California. Some of them were old Harvest Health stores. Unlike Curaleaf that expanded too quickly and now are selling off parts to focus down, Trulieve, I think, already quite focused. Well, focused, as you can see, in Florida in particular, which is they have huge footprint in Florida. I think this was a better idea than Curaleaf because I think they were building credibility in Florida first before trying to go into all the other states.
Okay, so that's enough of that. Looking at Trulieve here, they've got a few stores in California. News on them: they acquired a company, I believe, called Harvest Health back in 2021. It was the largest cannabis M&A, and so they have a strategy of hubs. And so their hub in the Southwest is Arizona, 20 dispensaries, 2 in California. No presence in the Midwest, but that's where GTI and Curaleaf come in. and then 125. So they have the most dispensaries of any MSO in any given state in the United States. Nuts. Around 40% market share in Florida, which may or may not go adult use later this year. But with their southern hub, they also have some exposure in West Virginia, Maryland, and Georgia, with their central hub being Florida. And then they have another hub, Pennsylvania, and one in Connecticut, maybe looking to expand here and here and here. So looking at Trulieve, this is a company that is dominant in the South and the Southwest. So with GTI, I have the Midwest and the Northeast. With Trulieve, I have the South and the Southwest. So you can kind of see why I own both of them. Thanks to Mr. Brown. Again, link to his channel in the comments below. He should get the credit that he deserves. So moving forward, we are going to take a look over here on Qualtrim again at Trulieve. So this is one that's considered to be sort of the most values orientated or Berkshire like cannabis stock, despite some of their other unscrupulous activities, potentially, allegedly. The way that they run their business is actually quite good. So on an annual basis, let's look at growth. Up about 65%, a little bit more controlled growth, still pretty massive, but a little bit, more methodical. $6.09 stock. What we can also see is they have a bit of a free cash flow yield that's great there, et cetera, et cetera. So that is a check mark on their revenue. Let's go over to quarterly, take a look at free cash flow. Remember that they have to pay 75% in fricking taxes. But in the most recent quarter, they reported $80 million in free cash flow, despite having every disadvantage. I'm really liking this company. So we're going to use that in some of our projections. Also, you can see here, they're a lot more reasonable with stock-based comp. So they're not diluting shareholders, doing a really good job on their balance sheet here. Going back to annual, let's take a look at so on free cash flow, despite how this looks, you just saw it on its quarterly chart. I am going to give that a check mark, all things considered. Earnings per share, a lot better than almost every other cannabis company. I'm going to give it a check mark. Cash and debt, it looks reasonable, especially for all the hurdles they have to deal with. I'm going to give it a check mark. Looking at ratios, a lot of potential. A median return on capital employed of 13%, despite all their disadvantages. I'm going to give it a strong check mark. Shares outstanding, they dilute, but a lot less than pretty much every other company. They're going to get a check mark on shares outstanding. As far as relative valuation, because of this negative year of EPS, this won't be reliable. We're not even going to rate that. Let's look at expenses. So they're going up, but they're stabilizing here. And in 21, they had sales. Their biggest expense is sales and marketing. That's growing. I don't prefer this, but because they have good returns on capital, I'm going to give this a neutral rating. Let's see if anyone's buying anything. $6 stock. Kim Rivers at this exact price, the CEO bought 25 G's of this stock. Insiders buying, CEO buying. Rivers, 2x times the price of this, $200,000 invested. Insiders buying. Massive insider buying by the CEO at prices from average of about $10 or $11. That's huge. Enthusiastic check mark on insiders buying. The only reason they buy is because they think the price is going to go up. So what we're going to do is our last DCF, $6 stock. Let's see if we can get an idea of the fair estimate on Trulieve, our top cannabis stock here on Not Financial Advice for 2024 and beyond. Super duper conservative projection on free cash flow, right? They did 80 million in one quarter, despite having a 75% tax rate. So are they likely to be able to do 40 million in a year in 2, 3, 4 years, with more states going legal and or with adjustments to regulation on 280E with the rescheduling attempt. It could happen under either scenario. They're showing themselves capable of producing free cash flow. So that 40, I think, is actually probably pretty light, but you want to make conservative assumptions, right? So doing a projected growth next 5 years, 35%. They're just guesses, folks, and valuations are very sensitive, especially to these growth rates. So apparently the CEO is buying hundreds and hundreds of thousands of dollars of stock, around $10 a share. Current price 609 based on these assumptions, value $16. She bought it as high as about $14 or $15. I can see more upside though. They did 80 million in one quarter. What if they did 80 million for the whole year next year, or in 2 or 3 years from now? What would it be worth? $6 stock. So this is like this could be potentially a 5x, 10x multi-bagger. 5x multi-bagger. Anyway, let's get back over here. Take a look at my portfolio. Everything's looking cool. Friday, the last trading day, the stocks that were up were cannabis stocks. So if you've been searching and looking for this type of information, you found my channel, make sure to subscribe. Like this video if you got value out of it. And as always, feel free to drop a stock or an ETF's ticker symbol in the comments below. I'd be more than pleased to make a video just for you. Thanks for stopping by. This is Sean from Not Financial Advice. And until next time, I'll see you later.